Welcome back to Gate Gain, where we help financial minds level up their careers and build thriving, independent advisory practices. If you are an accountant, bookkeeper, or financial analyst tired of grinding through repetitive compliance work, you are sitting on a gold mine of expertise. Growing online startups do not need another tax return filed. They need someone to help them read the strategic narrative hidden inside their financial statements. Transitioning into fractional CFO consulting allows you to trade hourly grunt work for high-impact advisory services while building a scalable, recurring revenue stream. Traditional accounting focuses on recording historical performance, but online startups desperately require forward-looking financial strategy to survive. These fast-growing digital businesses often scale their revenue rapidly while completely bleeding cash behind the scenes. Due to unmonitored ad spend, high payment processing fees, and messy inventory cycles. As a fractional CFO, your core responsibility is translating raw numbers into actionable growth roadmaps that founders can actually execute. You become the critical bridge between basic bookkeeping and high-level enterprise valuation, guiding founders through complex decisions. Without requiring them to pay a full-time executive salary. To build a compelling offering, you must clearly separate your fractional CFO services from standard bookkeeping or financial reporting packages. Bookkeeping tells a business owner what happened last month, whereas financial strategy tells them how to allocate capital over the next 3 years to reach their exit goals. You need to package your expertise around high-value outcomes like dynamic cash flow forecasting, unit economics optimization, and capital raising support. When clients realize you are directly protecting their runway and driving higher profit margins, pricing conversations shift from hourly rates to premium monthly retainers. Targeting the online startup sector requires a deep understanding of unique digital business models and their specific operational pain points. Software as a service companies, electronic commerce brands, and digital agency businesses each possess distinct key performance indicators that govern their financial health. You must master concepts like customer acquisition cost, lifetime customer value, monthly recurring revenue churn rates, and inventory cash conversion cycles. Founders in this space are often visionaries who lack financial discipline, making your ability to step in and implement immediate capital clarity instantly valuable. Setting up your service structure requires defining clear service tiers so you can comfortably manage multiple client accounts simultaneously. You might offer an emerging startup package that includes monthly financial reviews, cash runway modeling, and quarterly strategic planning sessions. For mature startups requiring intensive support, your top-tier offering can include weekly cash flow forecasting, board presentation support, and vendor negotiations. Structuring your offerings with firm scope boundaries ensures you deliver tremendous value without getting dragged back into day-to-day administrative bookkeeping tasks. Pricing your fractional CFO consulting services correctly is essential for maintaining high profit margins and avoiding overworking yourself. You should completely abandon hourly billing in favor of value-based monthly retainers that reflect the strategic impact you deliver to the business. Most fractional financial consultants charge anywhere from $2,000 to $10,000 per month per client, depending on complexity and scope. Securing just 4 or 5 high-value retainers can yield a lucrative business while giving you total control over your working schedule. Before pitching prospective clients, you need a streamlined tech stack that automates data aggregation and financial visualization seamlessly. Online startups operate in fast-paced cloud environments, so manual spreadsheets alone will not cut it for professional presentations. Integrate modern financial planning software, interactive reporting dashboards, and real-time cash flow monitoring tools with cloud accounting platforms. By utilizing advanced software tools, you can generate clean visual forecasts in minutes, allowing you to provide actual strategic insights. Developing a dynamic rolling cash flow forecast is the single most critical deliverable you will build for an online startup founder. Digital entrepreneurs frequently confuse revenue growth with healthy cash flow, leading to sudden liquidity crises when growth accelerates unexpectedly. Your cash model should account for payment holdbacks, marketing spend fluctuations, inventory purchase lead times, and seasonal revenue swings. Showing a founder exactly how many weeks of operational runway they have creates immediate trust and cements your role as an indispensable strategic guide. Optimizing unit economics is another area where a skilled fractional consultant can instantly prove their worth to a growing company. Many e-commerce brands scale rapidly while losing money on every single order because they fail to calculate true customer acquisition costs accurately. You need to analyze gross margins after accounting for shipping expenses, platform transaction fees, return rates, and merchant processing fees. Identifying hidden profit leaks allows founders to adjust their product pricing or ad strategies before burning through precious investor capital or operational reserves. Guiding online startups through capital raising and debt financing options is a major fee driver for fractional financial advisors. Whether a founder is preparing to raise seed venture funding or applying for revenue-based growth capital, they need institutional-grade financial models. You will prepare clear historical financial presentations, 5-year financial projections, and comprehensive pitch deck data visualizations. Having a seasoned financial professional standing beside them during lender or investor discussions gives founders immense credibility and dramatically increases success rates. Winning your first advisory clients does not require a massive marketing budget or an enterprise sales team. It starts with strategic positioning. Focus on positioning yourself as an industry specialist for a specific niche, such as subscription platforms, rather than a generic consultant. Publish detailed case studies on professional platforms demonstrating how you solved specific financial bottlenecks for digital founders. When you speak directly to the exact financial struggles of a target niche, potential clients view you as the definitive expert for their business. Networking directly with digital agencies, venture capital groups, and startup accelerators creates a reliable referral pipeline for new prospective clients. Web design agencies, digital marketing firms, and startup lawyers constantly interact with business owners who need high-level financial direction. Establishing mutual referral partnerships with these service providers allows you to receive warm client introductions consistently without cold outreach. Agency partners love referring clients to fractional advisors because financially healthy clients stay with agencies longer and pay their invoices on time. Conducting an effective discovery meeting is all about asking deep, probing questions about the founder's personal goals and operational headaches. Avoid talking about technical accounting compliance or software setups during your initial strategic consultation call. Instead, ask about their current cash runway, their target valuation for an exit, and what keeps them awake at night regarding company finances. When you demonstrate a complete understanding of their business obstacles, presenting a strategic monthly consulting package becomes a natural, high-converting next step. Onboarding new consulting clients smoothly requires a structured process that establishes clear expectations and operational boundaries from day one. Start with a comprehensive financial diagnostic audit to uncover hidden tax liabilities, messy chart of accounts structures, or inaccurate recurring revenue reporting. Establish communication channels and set fixed meeting schedules for strategic reviews so clients know exactly when and how to access your expertise. Setting firm boundaries early prevents scope creep and ensures your relationship remains focused strictly on forward-looking financial strategy. Building customized executive dashboards ensures startup founders stay engaged with their core metrics without getting overwhelmed by dense spreadsheets. Design visual reports that highlight 3 to 5 key performance indicators critical to their current growth phase, such as net burn rate or payback period. Walk founders through these visual metrics during your monthly strategic sessions so they learn how operational choices impact their bottom line. When business owners easily see the direct correlation between your advice and their improving financial health, retainer retention remains exceptionally high. Helping companies navigate team hiring plans and payroll budgeting is another area where fractional advice protects startup survival. Online founders often hire too quickly during revenue surges, creating massive fixed overhead costs that crush cash flow when sales normalize. You will help them create flexible capacity models that use independent contractors or specialized agencies before committing to permanent full-time executive hires. Balancing talent acquisition with sustainable cash reserves keeps the company agile and resilient against sudden economic shifts or market downturns. Managing inventory finance strategy for product-based online brands requires deep capital management experience and precision planning. Ordering inventory months before selling it creates a severe cash squeeze that can easily paralyze an otherwise successful product launch. You will assist clients in negotiating better payment terms with suppliers, securing inventory purchase financing, and setting up inventory tracking systems. Aligning inventory reorder schedules with projected sales velocity prevents cash from getting trapped unnecessarily on warehouse shelves for months. Strategic pricing structure reviews offer one of the fastest ways to increase a startup's profitability without increasing their marketing expenditure. Many digital startups drastically underprice their service packages or online products because they fail to calculate the full cost of delivery accurately. You can perform detailed margin analyses to show founders how minor price adjustments or product bundling strategies directly expand net profit margins. Delivering an immediate profit boost through refined pricing instantly covers your consulting retainer and proves your value early in the engagement. Tax strategy alignment with overall corporate financial planning represents another key area where fractional leaders provide tremendous long-term value. While you might not prepare the final tax filings yourself, you work closely with tax accountants to structure business transactions efficiently. Identifying research and development credits, state tax compliance requirements, and optimal corporate structures protects the company from massive, unexpected tax bills. Proactive tax planning keeps capital inside the business where it can be reinvested into higher ROI growth initiatives. Preparing online startups for eventual acquisitions or strategic exits requires years of deliberate financial structuring and meticulous record keeping. Buyers pay premium valuation multiples for companies with clean financial statements, predictable recurring revenue, and well-documented operational metrics. As a fractional guide, you help organize data rooms, eliminate personal owner expenses from records, and optimize working capital positions. Maximizing exit value for a founder often results in significant performance bonuses and solidifies your reputation as a top-tier industry advisor. Transitioning from an employee mindset to an independent fractional consulting business requires a fundamental shift in personal confidence. You are no longer selling hours or basic tax returns. You are selling peace of mind, strategic clarity, and enterprise value creation. Own your positioning as a high-value advisor, charge prices that reflect your impact, and never compromise on client quality or boundary setting. Embracing this strategic role allows you to build a high-margin consulting practice that offers total lifestyle freedom and professional fulfillment. Creating a personal brand online helps establish instant authority and attracts inbound client inquiries directly to your practice. Share real-world financial breakdowns and strategy videos highlighting how digital brands overcome common cash bottlenecks. Showing your strategic thought process publicly builds trust with potential clients long before they ever hop on a consultation call with you. Over time, consistent educational content creation turns your brand into a client magnet, eliminating the need for aggressive outbound sales tactics. Designing a scalable service delivery model allows you to increase your income without working 80 hours every week. Group your advisory frameworks into repeatable processes and standardized client presentation formats that you can deploy across multiple accounts. As your practice grows, you can hire junior analysts to handle data modeling while you focus exclusively on client relationships and high-level strategy. Scaling your practice through efficient frameworks allows you to maximize profits while maintaining a healthy work-life balance. Navigating professional liability and client contracting properly protects your practice as you take on greater strategic responsibilities. Ensure your consulting contracts explicitly state that you operate strictly as an external advisor and not as an officer with fiduciary signatures. Define scope boundaries, payment terms, and intellectual property ownership clearly to avoid misunderstandings down the road. Professional legal frameworks protect your business and establish clear, professional boundaries with every entrepreneur you serve. Fostering long-term advisory relationships requires continuous value delivery and adapting your strategic focus as the client's business matures. A startup's financial priorities shift rapidly as they grow from early-stage product validation to multi-million-dollar international expansion. Continuously update your financial models to address emerging challenges like international expansion, currency hedging, or enterprise governance. Evolving along with your clients transforms short-term consulting arrangements into lucrative, multi-year strategic partnerships. Maintaining absolute ethical standards and strict data security protocols is mandatory when handling sensitive financial records. Startup financial data, customer analytics, and proprietary metrics must be protected using enterprise-grade security software. Never discuss proprietary client metrics publicly and maintain complete confidentiality regarding all internal strategic discussions. Operating with unwavering professional integrity builds an indestructible market reputation that powers long-term business success. Continuous learning regarding digital platforms and modern finance tools ensures your strategic advice remains cutting edge. Digital commerce evolves continuously, introducing new revenue models, tax regulations, and financing structures every year. Attend industry conferences, join professional CFO networks, and test new financial software tools regularly to stay ahead. Investing continuously in your own professional education ensures you consistently provide high-grade strategic value. Mastering clear, simple communication techniques allows you to explain complex financial concepts to creative founders. Avoid drowning business owners in dense technical accounting jargon. Translate financial metrics into clear stories about business growth. Use visual charts, simple analogies, and straightforward executive summaries to make financial data approachable and exciting. Founders love advisors who make financial strategy intuitive, empowering them to make confident, data-backed decisions. Building a flexible, highly profitable fractional financial consulting practice is one of the most rewarding career moves today. Step away from repetitive compliance work, choose the startups you want to work with, and earn executive-level income on your terms. By mastering specialized digital industry metrics and packaging strategic offers, you position yourself at the very top of the market. Take action today by defining your target niche, building your core financial models, and launching your journey as a fractional CFO. Thanks for watching the video. Subscribe this channel. Like the video if you found the video great. If you have any questions, leave me your comment.